Hello and welcome to Crypto Weeklies. In this video, we are going to discuss Ethereum and ETH. None of the content is financial advice. Let's get started. ETH is up about 10% over the last 24 hours. Compared to its peers, this is the performance barometer. ETH is leading the charge over the last 24 hours. Link is grabbing the attention over the last 7 days, but ETH is not too far behind. Number third spot over the last 30 days. ETH is number 2, Link is number 1 in terms of performance over the last 90 days. ETH is the leading crypto by performance compared to its peers in the top 50 cryptos by market cap. Per this analysis, ETH right now priced at around $4,600 is coming in at a key juncture. It's above the 0.786 in terms of the Fibonacci levels, but it hasn't quite ran up to the $4,950 level, which was the previous all-time high for ETH. Meaningfully speaking, if ETH does go to that 5K level, that would signal in another layer of optimism or euphoria in the wider crypto market. Right now, you can see ETH is controlling the major narratives on the social media platforms as well. Again, the size of Bitcoin narrative has gone down quite a bit. ETH is and ETH and similar altcoins such as Chainlink, XRP, and the altcoin related season is most discussed over the last 7 days on this narrative word cloud sourced from social media platforms such as YouTube and X, and discussions related to crypto over the last 7 days. Overall, the seasonality based analysis, if we look at over the last 24 hours, this is the crypto news sentiment. There are some bearish news, but most of them are bullish. The overall sentiment is coming at around 86. This is all built in-house. These metrics are available on cryptoweeklies.com, link on the bottom of your screen. The crypto TLDR is the 24 hours summarizer of the crypto related news scraped from the machine learning algorithm and machine learning models trained on crypto specific sentiment and model weights, using BERT based model for crypto sentiment analysis, as well as looking at social media related comments and news articles from popular sourcelets. If we look at over the last 24 hours, that is, if we look at the narrative word cloud that we just saw over here, this is again sourced using the social media related activity related to crypto. One key thing to notice is the size of the bullish narrative, although slightly better than the size of all of the bearish narratives over the last 7 days. There isn't a clear cut signal that whether if the market is more bullish or bearish in terms of the social media sentiment. That also has reflected in this performance, where the last 24 hours although have been great, the last 7 days mostly flat to slightly bearish, apart from Link and ETH over here, and couple of ETH related tokens such as Arbitrum and others. Over the last 30 days as well, you can see only a handful number of cryptos rallied. Most of them were either flat or slightly bearish. So coming back to where it all kind of can be tied together with the wider crypto market is, and the estimated bull run completion as of 17th of August was only 47% complete, so less than 50% complete, based on top 100 cryptos, how they are reacting and on their own price action journey. If the volatility has increased, if the risk adjusted returns, the alpha, beta, and Sharpe ratio are how they are performing is with respect to historical performance and percent drawdown, one single metric to track the overall state of the bull run, with these color codes on the bottom, which indicate the risk levels in 0.2 or 20% increment, where the lowest risk levels are associated with this blue colors, where the market has cooled off significantly, like it did. The last print was on April 7th of 2025, when the market was definitely in a downward trend. The green zone, which is again not too bearish but not too bullish either, between 0.2 and 0.4 risk. The last time we were here was in August, early August, that is about 20 days prior to this current rally. The moderate risk is Again, if we zoom it out and look at only the moderate risk, right now we are in this moderate risk phenomenon where the prices are in between 0.4 and 0.6 risk across the top 100 cryptos by market cap. We haven't spent much of our time in this high risk environment. Again, we did come really close back in December. I think there were, if we were to look at historical data points, there were a couple of days which were the risk levels were slightly higher than 0.6 back in December and early January, but now they are revised down to 0.59 based on the volatility that the asset class has seen after that. So after the fact, but nonetheless, we have come very close to the end of the moderate risk level back in the December 2024 rally. Since then, there was a cool off which culminated in this early April 2025 drop, and then we were off back to the races, and then right now at around 47% risk. If we were to look at the current trajectory of both ETH and Bitcoin in 2025, the blue color is ETH's price action. You can see it was correlated to Bitcoin's price action when Bitcoin was dropping in that early April 2025 dropped 20%. By 20%, ETH dropped 56% from the yearly open. So this is again just 2025 performance. But as Bitcoin strengthened from that point, ETH caught up to it, and finally in early or mid-August of 2025, ETH started to outperform from the yearly open compared to Bitcoin. Right now, ETH is up 25% from the yearly open. Bitcoin is up 19% from the yearly open. And this is also reflected in this chart. This is ETH and BTC risk normalized based on the 20-week simple moving average, and the proportional as well as the raw distance between the price and the 20-week moving average informs these risk levels again in increments of 20% or 0.2, where the lowest risk is where the major dip buying opportunity occur. Again, we made several videos related to this back in March, late March, early April 2025, when both BTC risk and ETH risk were less than 0.2. Right now, what is a stark contrast is ETH risk is 0.76, so it's in the high risk environment, whereas Bitcoin risk is only at 0.44. That's because Bitcoin is much closer to its 20-week simple moving average than ETH is. You can check it over here. The 20-week simple moving average for ETH is coming in at around $2,800. So roughly speaking, about $1,800 difference, and in terms of proportion, less than around about 33% high. The price is 33 to 40% higher than the 20-week simple moving average. Whereas if you go to Bitcoin over here, the 20-week simple moving average for Bitcoin is at around $106,000. Bitcoin is only up about 10k. In terms of raw numbers, it's a bigger number, 10k, than ETH's 1800. But in terms of proportion, Bitcoin is only 10% trading currently 10% higher than the 20-week simple moving average, whereas ETH is somewhere close to 33 to 40% higher than the 20-week moving average. That has gotten reflected in this price action again, that ETH did correct somewhat in mid-August, that is around August 13th of 2025. You can see over here, this is the weekly candles, but if you change it to the daily view, ETH did have a pullback from that August 13th price action, when the price action was close to that almost close to that $4,900 level, higher than 4,800. Now ETH has rallied from this trend line. If you were to draw from this April 2025 major moves that ETH has had made, let's say if we look at it from this perspective, where ETH, whenever it reaches this ascending white line, again with this exception of the June 2025 drop, has held support at these levels. Going forward, if we were to extrapolate this line till about mid-September 2025, the price of ETH, if it were to hold this ascending white line, would be somewhere close to that 5k level, slightly higher than the previous all-time high for ETH. So that's what the technical analysis related levels for ETH highlight at this point. If there were a new all-time high, the first level for per the technical analysis is at around $7,500. That's the 1.618 for ETH. If we were to go back and look at ETH's machine learning based non-euphoria price action or non-euphoria ceiling estimates, the machine learning model says that if there isn't a euphoria case, the yellow line is the forecasted scenario in the next 6 months, between $4,400 to about $6,700 mid to late Jan 2026. If on the other hand, if there is some sort of a euphoria or 2 standard deviation moves in the asset class, where ETH taking the center stage of the asset class, right, like it is doing right now, the euphoria ceiling for ETH is between $4,800 and $8,600. If we were to extrapolate it this till end of January 2026, if we have a bull run till Jan end, the euphoria ceiling is about 9k. If on the other hand the bull market concludes like it did back in late November, early December 2025 or 2021, if that kind of repeats this time around, then the euphoria ceiling for ETH is at around 8k. Back in 2021, the cycle concluded in mid-November 2021. In 2017-2018 cycle in mid-January 2018. So if this cycle performs similar to the 2017-2018 cycle, then mid-January forecast for ETH is at around $8,800 if it were to reach the euphoria ceiling in January. So that's the machine learning based analysis. Again, all of this content, not just for ETH, for all of the cryptos by in top 100 cryptos by market cap are available on this website. Thousands of hours went behind maintaining and coding this up. If you like, and this is all available for free. If you like this content, please give a like and subscribe to help the channel grow and also stay informed. This is the polynomial regression based analysis to identify what is the fair value for ETH. This is a non-linear model where the fair value goes down in the bear market and goes up in the bull market. That is especially helpful for volatile assets such as cryptos in general. And you can see that in the bear market, whenever the price is below the pink line, they do offer some guidance but not much bottoming analysis. But if you apply 1 standard deviation residual to it, the green line over here, which is 1 standard deviation residual lower than the pink line, whenever the price has been below this green line, historically speaking, the price has been a great entry point or a great discount below the green line. This time around, again, the price did go to the dark green line, which is 2 standard deviation lower. That was in the depths of the bear market of June 2022 for ETH. But again, for consistency purposes, we'll keep looking at this green line over here, currently coming in at around $2,800. And this green line, $2,800, coincides perfectly with the ETH's current 20-week simple moving average, currently coming in at around $2,800. Just to reset everything. Yeah, so this is the 20-week simple moving average. You can see the green line currently comes at around $2,800.50. So that's the confluence between these models. Again, these are totally different model. And if you were to look at what is the fair value, it's currently at around $4,500. So current price is very close to the fair value. So ETH is right now per this model fairly valued. But you can see that in the bull run, the prices not only go to the fair value but overshoot the fair value. So what we have done is over here is applied 1 standard deviation residual to the upside to identify where is the non-euphoria bull run peak for ETH, which is currently coming in at around $7,400. Again, very confluent with the machine learning forecast, the regression analysis, as well as the technical levels. The 1.618, as mentioned earlier, is at around $7,400 over here. So if ETH were to perform like it did back in March 2024, July 2024, and December 2024, and hit those yellow line going forward, sometime late 2025. That ceiling currently is at around 7,400. If you were to extrapolate this could somewhere be close to that 8K level. The 2 standard deviation ceiling, again, that would be heavy euphoria case for ETH if that were to materialize, because from cycle to cycle it becomes more and more hard to reach that 2 standard deviation or two standard deviation residual. Right now that is at around $12,000. But what you need to understand is, again, this model is dynamic. It does react to the latest price action. It is not retroactively fitted. That means the orange line will not change its shape historically, but let's say if there is a continued downturn, the slope going forward might be much smaller. So right now what is 12,000, if let's say its price action does not catch up to this level for a prolonged time, this might take a downturn like it did back in October 2022, when the 2 standard deviation two standard deviation orange line was around $6,700, and in October 2023 that was at $6,000, in July 2024 at around $5,400. So that could well happen. So and again, for that, again, it's very hard to extrapolate that further out into the future. That's why these charts, again, are updated daily to account for whatever happens to the latest price action and to inform the regression based overvaluation. This is the euphoria overvaluation. Yellow line is the 1 standard deviation non-euphoria overvaluation at around $7,400. So those are the 2 scenarios per the regression based model. If you were to look at the individual daily price action and how it reacts to this risk levels based on the regression based valuation, this model did identify some of the great entry points for ETH whenever the risk levels are less than 20%. This is the blue line, and the purple line is where the discount for ETH is significant. If you lower the risk level even more, that whenever the risks go to less than 10%, that is very close to the bottom for ETH in 2022. But the with this comes with a caveat that if the risk levels are identified are very low, so if one wants to nail the bottom, there is a chance that they miss out some of the lows, like this model did back in March 2025 till about April 2025. The lowest this model went was at 0.11. If it were bottoming out at around 0.10, this would have been in purple color. But again, no model can get everything right. So on April 8th of 2025, the risk levels identified by this model were around 0.11. So fairly close to the lowest permissible risk level per the model. Right now the risk is coming in at around the third best time to DCA. Per the model, it's at around 27% risk, or in this intermediate risk level, which is not too high risk but not too low risk either, kind of between the end of the low risk accumulation phase to before the onset of the major euphoria rallies. So if we were to look at ETH in terms of where it goes in those euphoria rallies, the guidance per this model is between 0.4 risk and 0.6 risk. If that kind of price action were to materialize, that forecasted scenario is between $5,700 to about $7,600. Again, confluent with that $7,400 level, which is close to 0.55 risk in terms of ETH. The maximum level identified that ETH could go is between at around, if it were to go between 0.8 to 1 risk, is between $9,500 to about $11,500. Taking a middle point is at around $10,500 at around 0.9 risk. So that's the regression based forecast for ETH. The time weighted average price model came in handy and identified this March 2025 lows where the price was trading below the blue line, which is the time weighted average price, helping again, this is kind of goes up like a rocket fuel during the bull run and kind of acts as a stable DCA accumulator in the bear phases where it kind of flattens out when the price action basically takes a breather in the bear market. Right now it's kind of at around 1500, almost $1600 level. It's kind of having a steady trajectory. It's not in the rocket fuel mode like it was back from January 2021 till May 2022. So let's see how it reacts towards the end of the year and come mid to late 2026. If ETH is sufficiently close to this blue line in the bear market, that could also usher in a great accumulation phase for Ether for this model. The 20-week simple moving average, as discussed earlier, again, right now the risk levels have been amplified as the price has moved about 40% away from the 20-week moving average. Again, this model did identify the March-April 2025 correction for ETH. Right now the risk level, per the risk levels, again, between 0.8 and 1 risk, if the per the 20-week simple moving average, the price could cool off between $4,800 and $5,100 in the short term per this model. So overall, the estimated bull run peak for ETH has a confluence of all the risk-based model. I'm not talking about the machine learning or the technical levels. The individual risk-based model, the regression model, the time-weighted average price risk, the 20-week simple moving average risk level models. The weighted risk is at around 0.4. The estimated bull run peak with the hypothesis that at the euphoria phases of ETH, all of these individual models go to that 0.9 risk. If that kind of a scenario is ahead of us, the estimated bull run peak for ETH is at around $10,000. With that, I would like to conclude the video by saying the most sound area of confluence is at around 7,400. After that, it's anybody's guess. There might be a significant resistance in the short term per the 20-week simple moving average between $4,900 to $5,100. Hope you enjoyed the content. None of it has been financial advice. Hope you enjoyed it. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.